Alright guys, this is Dividend Doggo back with another video. This is the weekly update. This is for April 24th. This month has just flown by, holy cow. So the first thing we're going to dive into today is obviously there's been some stuff that happened with stocks in the portfolio that brought some down, some went up, but I'm going to give you the first glance at what my week's performance was in the M1 Finance portfolio. As you can see, it ended up the week being down just a smidge. We did get a tiny little bit of dividend squeaking in here, but being down $658.78, or a money weighted average return of 0.11%. This was primarily due to the drop in Mo, which you will see in Altria in the consumer pie. You will see that they were down pretty significantly, $5,700 just in this one stock. This is a pretty hefty percentage of a drop for this company. It was up in the 50s. I'm not really worried about this, and the reason that this occurred is because of the Biden administration going after the nicotine quantities in tobacco products, basically. We're still not really sure what exactly is going to happen with this, but it's as you can see, for me, this stock is still overall very green, and it prints money. It pays a high dividend, so you don't generally expect high market gains from high dividend stocks. However, this one had gone up pretty significantly. As you can see here, the earned dividends for all time are only about 3,800, with another little over 1,000 coming in just a few days, actually. So that dip, hopefully it stays down long enough to, I'm debating on whether or not I want to roll those dividends back in. I think I'm going to, because it's got a pretty fetching yield. It's got a decent PE ratio. Overall, the stock's performance for me has done very well over the past. I've been invested in Mo since, December 17th of 2019. And as you can see, I mainly blocked money into it right around June 11th, just after the crash, and things started recovering, and it's just kind of consistently gone up. And you see I haven't really added a whole lot to it. It's just kept rolling up through the market gains. So I'm going to go ahead and I'm going to reinvest my dividends, I think, in this. That'll come in, I believe it comes in the 30th, so it's right at the end of the month. So you'll see that dividend drip come in, and I'll talk about how much in income that's actually going to purchase for forward income, just off of the drip alone, because that's one of the highest paying stocks that I have in my entire portfolio. So yeah, the rest of the consumers, I'll go in and go back to 1 week here. The rest of the consumer pie, Coca-Cola was up, Home Depot was down a little bit, Target was down, Costco was up a little bit, and Pepsi was up a little bit, but you'll see that there's a new position in here, and that is TAP, Molson Coors Beverage Company. I put in and purchased about 30 shares of this. It is down a tiny bit since purchasing it. However, there's no dividend on this stock currently. They had suspended the dividend due to the virus issue, and they're likely going to reinstate it. Their earnings are reporting a decline, potentially because of the fact that bars weren't open. For the most part, for most of the country, we're going back into recovery. So this is kind of a recovery play for me. But I'll be really honest with you. The main reason why I bought into this stock is I absolutely love Dwayne Johnson, The Rock, and he has partnered with this company to get out Zoa, his energy warrior health drink. And I ordered 3 flats of this. and tried every flavor I could at the time. There's a new orange flavor that I haven't gotten to try yet, but I absolutely loved. My favorite was the pineapple coconut. That is just fantastic. I really, really enjoyed that. So I'm hoping that that will take off some. I'm sure that Topo Chico and a bunch of the other brands are going to get back into the swing of things with the ranch water coming out. I watched Money Live. I believe in it. I originally moved to California from Texas, so I absolutely know that there are crazes and fads that go on, especially in the Austin area for drinks. But I think this company's going to be a winner in the long run, and I'm willing to throw some shares in there. I picked up 30 shares at $53.26. It's not a huge buy for this portfolio, but I wanted to make sure that I had some shares of that going forward. I am going to continue to add to Lowe's, especially if it's going down a little bit. We purchased this at 220, and it was down a little bit on the week, but overall it's still up. No, sorry, it's down overall just barely by 0.18. And I think forward that it's just going to be solid. And I am really tired. I got my vaccination shot yesterday, so I'm a little out of it. It is up overall 0.66, but it ended the week being down just slightly. I am going to build this up hopefully to about a $10,000 position, and then I'll probably leave it kind of in line with my other consumer plays. So utilities, I do want to talk about VST real quick. I want to touch on that. 1 week, I believe it was down a little bit. It was up in the mid part of the week, but then came back down. They are reporting on Monday morning. I believe that is the 26th of April at 5 a.m. Pacific time. They're reporting the total damages for the storm Uri that hit Texas and knocked out a ton of power, caused a bunch of problems. That winter storm killed, I believe, around 80 people. So this stock was hit relatively hard with that, and that's why I dove into it, dropping more money and buying more shares. My original goal for this position was only about 2,000 shares. As you can see, I'm up at 6,001. This does pay a decent dividend, and they raised their dividend 11%. Even with the storm information being on their plate, they continued the plan and raised the dividend. The dividend plan for 2022 was to raise the dividend up to, I believe, 76 cents. It is right now at 60 cents, so that's a really hefty dividend raise. And if that goes through as planned, my future outlook on this company is still very bright. They have significant free cash flow. They're a decent sized market cap, and their share buyback plan had already gone into effect at the beginning of the year prior to the winter storm. They had planned to buy back, I believe, somewhere around 500 million in shares, and they had activated that at the beginning of the year this year, and they had to kind of roll back those plans tentatively. But on Monday, we'll see what happens with this. It could drop a little bit, depending on how high and how expensive the damages were. The rough estimate was between 700 million and 1.3 billion dollars. That is a huge amount of money that they're going to bear on their shoulders, so that they don't have to transfer it down to their customers. They're literally just going to take it on the chin, which if you listen to their CEO talk, I'm impressed, both with the CEO and with this company overall. So this is just definitely a hold play for me right now. and see where it goes. I think that Monday we may get some great news because they're going to give us the forecast for projecting forward for the year and see if we've got any big changes to the plan that they had. As far as the rest of the portfolio, AbbVie absolutely was crushing it this week, up $3,600 or 3%. Even Johnson & Johnson, with having the vaccine information, it looks like it's going to be rolled right back into the plan of getting vaccines out via the Johnson & Johnson shot. There was some worry with that. I figured Johnson & Johnson would end the week down, but it actually came up. Industrials, CIX has just taken off and absolutely crushed it. So that is pretty fantastic. It's just continued to go up. I'm surprised at how much the stock has gone up over the past couple months. If I look at this, I originally purchased these shares at $15.09, and that was what was that? That was on March 11th. So it's not even been a full 2 months, and the stock is already up $10,000. 9,800 of that is market gains. I'm just gonna ride this one out. They raised the dividend significantly, and I think it's a fantastic play, especially from a free cash flow perspective. 3M also ended up the week going up a fair bit. Lockheed Martin is another one of those. It was down a little bit on the week, but the forecast for this stock is high. It's going to go up into the 400 range. They're just consistent. They've got so much of a backlog. I need to pour in at least another $3,000 or $4,000. I'd like to get this one up to about 10K. Cat is about the same for me. I want to get Cat up to about 10K. Raytheon I'd like to pick up to about 3 or 4K. So I'll probably add a little bit more to the industrial sector pie over the next few months. You'll probably see that kind of roll in. And this just floored me. AT&T had a pretty good earnings call. AT&T is up on the week 4.84% on the money weighted average return. This is wild. This sets T into the market gain being green for me, which it had been in the red for quite some time, just being held up by the earned dividends. The T dividends come in as well, and I'm going to reinvest that right back into T. I'm going to keep that snowball rolling because I think that HBO Max has done a phenomenal job with getting onto their feet. They had a really rocky start with the launch, and there just wasn't enough quality premium content last year. And with them moving all of the movies to 1 month release where you can go in and watch the films for 2021, there's a lot of argument around whether that was good or bad for them overall. But as a shareholder who is actively using the product, I love it. I absolutely love it. I just watched Mortal Kombat yesterday. It, to me, felt like a really solid beginning to what could be easily a 3 or 4 movie franchise. They've already gotten a couple of the actors to sign on for 3 or I think they said 4 movies. So that could be fantastic. I was a big fan of Sonya Blade. I really like this iteration of Kano. Absolutely fantastic. Fun movie watching experience for the weekend this weekend. We all need to kind of turn our brains off throughout the week, and that was definitely a good experience for me. Next up, the real estate pie. The real estate pie was looking really good. Ended the week up. Arbor Realty Trust ended up 4% up on the week. O Realty Income was up 3.5%. Store Capital was up 2.8%. Absolutely rocking and phenomenal. LTC was down just slightly. I don't hold a ton in LTC. I've just kind of kept it overall. It's still down about 8%. I'll probably leave it there and just keep collecting that dividend and rolling it into other stocks. As far as that goes, I'm not really adding more to the real estate pie at the moment because that is a very highly taxed pie for this portfolio. There are just so many other quality stocks that I want to pick up. I do hold a bunch of these via IRA as well, Store Capital and O primarily. So I will show that portfolio because that is also now in M1. I will showcase that portfolio as well, probably this week. Energy overall, EPD squeaked out, making the entire portfolio green. VLO was down on the week. S&P for China, that is down as well pretty significantly this week. These stocks are going to be in fluctuation. They always kind of have been since I've added them. Overall, this portfolio is green across the board. The only one being Phillips 66, which is still down, but that is my smallest position in the energy sector. So I'm not too worried about that overall for the week. It was up just slightly, and I'm totally fine with that because most of those are very high dividend stocks. So I'm not expecting tons of capital gains from them. So tech sector, this sector was a very large position in the portfolio, and when I sold out of Apple and Zep, which was HomeY, I believe is how you say it, I've rolled those positions into other stocks, mainly VST was where Apple went. Broadcom, I've just kind of had that one share sitting there for quite some time. I wish I'd put a little bit more into it, but I hold so much in stocks via 401k. It's kind of hard for me to want to add to Apple and Microsoft, even though I think they both have very, very bright futures. And, time will tell whether it was a mistake to have sold out of Apple. I had pretty significant gains in them when I rolled that over into VST. But overall, I will likely add some more shares back in, especially if we see any kind of real pullback with Apple. Microsoft is probably the better value play in my opinion right now. And I'm more interested in all of the things that Microsoft has going on. I did watch the Apple keynote with everybody in the Joseph Carlson show. That was really interesting. The price point for the new iMacs and the quality and how they look is just phenomenal, especially for like young students going off to college. That's absolutely phenomenal. So I do want to dive into the activity. The only thing we really had was we had I did a deposit, and I did the morning buy on the TAP. I wanted to add that stock to the portfolio, and I then did a little dividend buy, which was like $74 from the Bank of Ozark. I probably should have rolled this back into the Bank of Ozark, but I wanted to round out the 30 shares. And that is pretty much where the portfolio stands. We're looking at that right at that sweet spot. I'm having trouble bridging that gap up over 120,000 in gains, but the portfolio is doing strong. We're printing dividends and rolling that right back in, so the portfolio is going to continue to grow. Again, ending the week up, down just slightly, and that's totally okay. If every week was green, everybody would be rich and everyone would just invest in stocks. Don't time the market, just be in the market for the long haul, and you will make plenty of money, especially if you're picking high quality blue chip stocks. This has been Dividend Doggo signing out. Have a great week. Stay healthy, stay humble, and keep investing.